Hello folks, L.A. Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey, just looking at the numbers here, what a week. I mean, that is for the record books, right? And that comes after 2 weeks of massive gains already. So market on a tear, right? Brand new highs, unprecedented gains. It all came about as a result of Trump and the Iranian crisis and flipping the situation back on Iran. Although this weekend I'm doing this report, it's about noon my time, West Coast time, on April 18th, and it looks like the Hormuz Strait is closed again, so we may see some of this backing and filling that is needed. Let's look at the S&P here, and what is probably going to come back, and in terms of how far does it come back, this looks to be probably worst case, the 69.16 up to 69.66 area. You got all these bullish retest regions on the way back now. Now, mind you, we had a bunch of them on the way up, and it blew right through all of those, so I guess headlines could blow right back through these, but you would think that you're going to see some buying on the way back down. And if I look over at the weekly, that also seems to support it in terms of where that bearish retest region is. NASDAQ also supports that same case, right? You got two swing point highs that typically will give you a buying support. And again, you got the retest regions clustered down here, which complement what you just saw over on the weekly chart, just a little bit lower. Last week I talked about crude oil probably had topped. Well, it did, and now you're starting to see the drop. You did get a hammer reversal on Friday, suggesting that this thing wasn't quite done. There is a bearish retest region, and we know those get tested right away, so usually, right? So the odds of that thing being hit is pretty good, but more than likely, this market is going to work its way lower over time. It's just going to have a lot of bounces along the way, probably. The real story is still the AI trade, and if we look here at the semiconductors, this is a massive move in terms of percentages in a short period of time. And just like the NDX, this has not pulled back the entire trip higher. So you got a V-shape vertical move, right? The retrace would be back to here. That would be the ideal spot. But I doubt this one's going to get back that far to start with. I would think somewhere up in that area would be more likely. A lot of folks still look to Bitcoin. I want to get excited about Bitcoin. It kind of has this little rounding type bottom going on here, but I'd remind you that this is a retest, the bearish retest region, never tested here, around 81,000. I expect that's where you're going to see the sellers show up. And just like the semiconductors has been a big part of this move higher, the mags, right, the semiconductor, not the semiconductors, but the mega cap tech stocks have been a big piece of it too, and you can see the big cluster range right in this area around 62.5, 63. That's probably going to be where the buyers come back in. An interesting factoid here is that the S&P equal weighted, right, has not even reached the highs yet, despite the S&P weighted blowing through them. NDX, same story. It hasn't quite broken out, a little bit farther along, but it's just telling you that there's a lot of stocks that haven't moved nearly as much as the weighted indexes have. There's nothing in the charts telling you that an imminent retrace is apparent. I'm sure if you had RSI and some of those other indicators, the old classical ones, they probably would be telling you that things are kind of crazy. Here's the trend breadth. It's down here. It's finally reached this level where bounces typically do try to take place. The real case is when this green line gets up to this level, right? That's when you have a much better chance of a retest, a retrace. But the reason this isn't up there is just what I just said earlier, and that is most stocks are not outperforming the index. And so most stocks are just simply not changing trend yet as compared to the index. to kind of round out some of the sentiment type things, you've got a greed reading already. That was extreme fear less than 2 weeks ago. And the odd thing here is you've still got all these bearish on the AAI sentiment. You've still got all these bearish people out here compared to the bullish ones with this kind of a run, which to me is kind of crazy. I'll land it here on the bottom line. You know, I've said that, you know, index probably was going to get a retrace. Well, it didn't get a retrace. It just went up and made new highs. I didn't think it would do that. But you know, a lot of times this market humbles you and does what it wants to do. I still think there's going to be a retrace, right? And I expect it's going to get bought. The problem now is just like, how do you manage what's happened, right? You had this vertical run. How do you manage where you try to buy this thing, and you know what kind of risk you take? And that's all personal. You know, I booked the gains I had on the oil trade. I was short. I've also booked some of my long exposure, as I indicated on the Discord channel that I run to the members. And I added pretty heavily to my short positions on Friday in the indexes and the semiconductors and even Intel in particular. So, you know, I don't know if those are going to pay off right away. I suspect they are going to pay off, but it can be pretty painful while you wait. And so that's where I'll end it. Have a great one. I'll see you next time.